Dan, let's start with our chart right here. G hashtag BTV space 7143, just to outline how investors are taking a look at these WTI short positions when Harvey hit. Of course, that's subsiding now, and we are seeing those hedge calls decrease while the longs are rising. How are investors playing this out as the two storms start weakening and recovering?
You hit it exactly on the nose there. When Hurricane Harvey was hitting, people saw the risk to refineries because Harvey landed right at Houston, the biggest refining and petrochemical complex in the world. It processes U.S. oil directly coming down from the Cushing, Oklahoma area where WTI is priced at. So those refineries being offline means they can process less oil. Oil builds up. We've seen 1.5 million barrels added to Cushing stockpiles in the last 2 weeks, and that's going to put a way down on prices. But I think the refiners surprised the market a bit after that horrendous rain that Harvey put down. They actually got back online a little bit quicker than people expected, and so now people are seeing refining coming back online, more crude being eaten up because gasoline prices are higher, and so they're getting back into the long game on oil.
Dan, refiners coming back online, as you said, boosting long positions for crude. What impact has this had on oil markets?
The other impact outside of the straight-up oil price has been on gasoline futures. The refineries were shut down for several days, and some refineries are still down for weeks now afterward. And key pipelines that carry gasoline from the Gulf Coast up to New York Harbor, where gasoline futures are priced, those have been shut down for a while, although they're back online. But if you look at gasoline prices, they still remain elevated from before when Hurricane Harvey hit, because speculators and traders are trying to incentivize refiners in Europe and Asia to pump extra fuel out and then ship it to New York to make up for any shortages that might occur because of the shutdown of refiners along the Gulf Coast.
Yeah, give us a sense here. When it comes to crude, we're seeing the short positions go away, long taking hold. But in the context of what's happening in the industry right now, how is this going to hold in terms of momentum?
It's a good question. It's a tough one to predict. I think the crude industry or the crude markets this year have really traded range bound in the sort of $45 to $55 range, and Harvey doesn't seem to have any kind of long-term impact there. I think we're going to go back to that sort of range for right now. And as Hurricane Irma moves its way up the coast, you're seeing its impact also on natural gas markets be a little bit tempered. Last week, there were fears as many as 9 million people could lose homes or could lose power in Florida, which would reduce gas demand. So gas futures dropped by more than 5%. But now that the worst seems to have been averted, only a couple more than 3 million have lost outages. We're seeing natural gas futures bounce up a little bit today.